If you've ever stared at a financial screen and felt completely, totally overwhelmed by all of his blinking colors and weird shapes, well, you're in the exact right place. Today, we're going through a true step-by-step guide designed specifically for beginners. We're going to demystify these charts. By the time we wrap up this explainer, you're going to be able to read the market like an absolute pro, relying entirely on the power of Japanese candlestick charts. Let's get to it. Let's just address the elephant in the room right away. Is financial analysis simply too complicated for the average person? I hear this question all the time. It is incredibly common to feel intimidated by investing. You look at these massive screens with all those zigzagging lines, and it honestly feels like you need a PhD in finance just to figure out what's going on. But I'm here to tell you with absolute certainty, it's really not as complex as the experts make it look. Okay, let's dive into this, because the truth is, all that seemingly impossible financial analysis actually boils down to two very simple things. Ready? Reading charts and reading the news. That is literally it. And while there are a million types of charts out there, we're zeroing in on the absolute most popular, most effective one used by investors all over the globe. Master this, and you've basically mastered the heartbeat of the market. Here's our roadmap for today. First, we'll decode the basics of Japanese candlesticks. Second, we're going to break down bullish reversal patterns. And third, we'll cover bearish reversal patterns. Section 1. Decoding Japanese Candlestick Basics. Think of this as learning the alphabet of the market, right? Once you know the letters, you can start reading the words. So, what exactly is a Japanese candlestick? Well, a candlestick chart simply lines up these red and green candles one after another. They are, quite simply, the very best way to visualize the ups and downs of a price over time. This visual is what actually lets you spot those prime opportunities to buy or sell, because timing is everything. For example, if you're looking at a 10-minute chart, every single candle you see represents exactly what happened to the price within that specific 10-minute time interval. Now, what's really interesting about this is the anatomy of a single candle. Every candle has the solid part right in the middle, and we call that the body. This body shows you the exact range between where the price opened and where it closed during that time frame. Now, sticking out of the top and bottom of that body, you're going to see these thin lines. We call those shadows, or sometimes tails. And these shadows are absolutely crucial because they show you the extreme highest and lowest price levels that the asset hit during that exact same interval. And reading them is beautifully simple, thanks to the color coding. If you see a green candle, it means the price is going up. The opening price was lower and the closing price was higher. On the flip side, if the price closes lower than it opened, that candle is red. Red simply means the price went down. It really is as easy as that. Green is up, red is down. Section 2. Bullish Reversal Patterns Explained. Alright, now that we know our alphabet, let's start reading some actual market signals. This is the really exciting part where we learn to spot the patterns that scream, hey, time to buy. First off, let's define what we even mean by bullish. In the financial world, a bullish reversal pattern is a visual cue showing that a price that's been steadily dropping is highly likely to reverse direction and start going up. These patterns act like your own personal early warning system that the market is turning around, which makes them a very, very strong signal to buy. Let's look at our first major buy signal, the bullish engulfing pattern. This is a simple two-step sequence. First, you have a red candle, which means the price is going down. But then, in the very next time interval, a bigger green candle forms, and its body completely covers or engulfs that previous red candle. Basically, the market is turning up and you can buy. And here is a great pro tip from our source. That buy signal is considered even stronger if this giant green candlestick manages to engulf the previous 2 or 3 red candles. And this next one brilliantly illustrates how literal these names can be. It's the hammer pattern. The name is completely self-explanatory when you look at its shape. You'll recognize the hammer by its short little body right at the top, and a long lower shadow sticking out the bottom that's about 2 or 3 times the length of the body itself. Usually there's a very short upper shadow, or sometimes no shadow at all up there. When a declining price suddenly forms a hammer, it's a clear hint it's reversing direction. But since we're beginners here, always play it safe. The recommended option is to wait for some extra confirmation. Specifically, wait for a subsequent green candle to close above the open of the hammer. Once you see that confirmation, boom, it's time to buy. Our final bullish pattern is a 3-part sequence known as the Morning Doji Star. This one tends to pop up when there's slight market movement. Step 1, you see a red candle. Step 2, a tiny cross-like candle, which is called a doji, forms. And step 3, this is the crucial part. A green candle forms and closes beyond the midpoint of that very first red candle. That specific 3-candle combo is your signal to buy. Oh, and remember, if that final green candle happens to be longer than the initial red one, this buy signal is considered even more reliable. Section 3. Bearish reversal patterns explained. Okay, so we've learned how to spot those awesome buying opportunities. But as a smart investor, you also have to know when it's time to protect your profits. A bearish reversal pattern is the exact opposite of what we just covered. These are patterns indicating that a current uptrend is shifting into a downtrend. When you spot these formations popping up on your chart, it generally means sellers in the market have likely managed to overpower the buyers, and the price direction is about to reverse. Because of that, these are widely perceived as your signal to sell. Let's move to the next concept and see how this builds on what we already know. Compare these two patterns side by side. Earlier, we saw the bullish engulfing, where a bigger green candle eats up a smaller red one, signaling a buy. Well, the bearish engulfing pattern is just its mirror image. Here, a green candle is completely engulfed by a massive following red candle. When you spot this bigger red candle completely dominating the chart, that is your signal to sell. Next up is a pattern with a delightfully ominous name: the dark cloud cover. This formation shows up right before a price drops down. It starts off with a long green candle. Next, a red candle opens at a new high. Although, quick caveat here from our source, if you're trading currencies, a second candle opening at a new high is pretty rare. So in that case, the red candle usually opens at the exact close level of the green one. Finally, that red candle drops down and closes below the middle of the previous green candle. Once you see the stock cloud actually form, you can go ahead and sell immediately. Or, just like we did with the hammer, you can wait for another smaller red candle to form just to confirm that downward trend. So the crucial point here is knowing exactly how to spot when an uptrend is officially over. And honestly, nothing shows that better than the shooting star pattern. You are going to see this at the very end of a rising market. It's a red candlestick with a small body, a long shadow pointing upwards, and a short lower shadow. The fact that the price tried to rise, which is what creates that long upper shadow, but eventually closed down to create a red body, tells you that the price, which had been rising up to that point, might now start falling instead. Consider it your green light to sell. We have covered a whole lot of ground today, but I really want to leave you with a deeply encouraging thought directly from our source material. Reading Japanese candlestick charts is not rocket science. Observe your charts carefully and you'll soon learn to spot patterns as they form. You really can do this. The alphabet of the market is just red and green, bodies and shadows. Once you know what to look for, I promise you, these patterns will start jumping right out at you. Now that you've got this beginner-friendly step-by-step knowledge securely in your tool belt, I have one final question for you. Are you ready to spot your very first market turning point? Go ahead and open up a chart today, look for those engulfing patterns, look for those hammers and those shooting stars, and see exactly how the market communicates. Thank you so much for joining me on this explainer, and happy charting.